What's up team? Welcome to Wealth with Kai, and today I'll be going over my public portfolio that has been live for approximately a month now. But before we get started, I just need to point out that everything in this video is for entertainment purposes only, so please don't treat anything that I say or show as financial advice. Now, I also do want to apologize that I haven't been too active on YouTube. Since then, I have added a couple of positions to this YouTube portfolio, as well as made one position a little bit heavier. But the reason why I haven't been uploading was actually because the whole of last week I was bedridden with flu-like symptoms. Fortunately, I don't have COVID and I already have my second COVID jab. I'm currently still on antibiotics, but I am feeling a lot better. Secondly, Auckland has also loosened up on its lockdown restrictions, which means a couple households at a time can get outdoors, and that has meant that I have been out and about a little bit more, which means less time for YouTube. Now, I already have my Hatch YouTube portfolio open. As you guys can see, we currently have $0 ready to invest, but our total return is already 12.7% approximately based on what Hatch has shown, which is really good considering that this portfolio is approximately only a month old. So yeah, up approximately 200 New Zealand dollars. We put in 1,800, total value $2,003. This total return is a little bit inaccurate just because of the Hatch fees as well as a lot of other things going on. And I'm also not sure how often Hatch updates its live currency stuff, which is why we will still continue using Excel as reference. Now, I am saying on Hatch just to show that all my positions are not BS, not bullshit, and that I have been actively investing and have been trying to beat the market, and that is what I've done at least for this month. Now, when I first started this portfolio, it had a total of 8 holdings. So since then, like I said earlier, I have added 2 new stocks. One of them is more of a short-term, spicy play that I think can be a really good talking point moving forward that has done quite well so far. And another one is more of a mid-long-term investment depending on how things go. So with our first new addition to the family is AMC. I got it at approximately an average price of just below $36. I think at around $35 as well as a $33, it's a pretty decent support level for some good upwards momentum, which is why I bought it. And yeah, it has done really well for me since then, up around 14%. For privately, when I buy it around this price, I would consider selling at around the $40 to $45 price range. But for the purposes of this public portfolio, where the Hatch fees is a little bit brutal, I plan on maybe holding this out a little longer than that. Maybe beyond $44, $45. We will have to see. The second stock that I added was Playboy Group. I bought it at around $23.53. And yeah, it has also experienced a really nice pop, up 17.85% in approximately the 1 to 2 weeks that I've held it. Sorry, I don't even know when I bought it because last week was just such a blur for me when I was just so sick. But yeah, up a lot since then. A lot of it is due to speculation of a new platform that they are releasing that is going to directly compete with OnlyFans. I am quite mid and long on the stock, so I have no intentions of selling that as of yet. As you can see, I have, maybe you guys can't see, but I also doubled my position on ChargePoint just because, like I said, under $20 for me is an absolute steal. It has since then bounced up and return of 11.46%, which is also not bad at all. Obviously not as good as some of our other stuff. SoFi up already 41% in a month. As well as Coinbase up 29%. Props to everyone in the crypto market investing in crypto. I hope you guys are reaping the rewards because clearly I am most definitely enjoying Mara's runs as well as Riot's run as well as Coinbase's runs in my private portfolio. I do regret maybe not adding Mara to this portfolio, but that is all good. Profit is profit, whether you guys see it or whether I experience it privately. Alibaba, along with a lot of other Chinese stocks, have made its rebound, so up 16.44% since then. NIO is also part of that, up 14%. So all in all of our stocks are already up double figure percentages, except a couple, which Cleveland Cliffs is really close, 9.65%, and Citigroup 6.83%. But that's what I expect because that was one of our safe plays that is a hedge against inflation. Clearly the market is really transitioning towards a lot of growth stocks right now. So yeah, Citigroup especially is a slow and steady pace. DraftKings down 9% unfortunately, our only red stock, but all in all, we're hitting it out the park 9 times out of 10. You can't win all of it. And I did also say that I am long on DraftKings, so I'm not too worried about that. So yeah, all in all, we are doing really, really well. I am going to switch over to the Excel now just to have the more accurate figures, as well as go over maybe a few stocks on my radar before we wrap up this video. Very short video, but yeah, I'll see you on Excel. Awesome, so now I have Excel open. One thing that is missing is my face, just because I realized any single corner I put the camera in, it did obstruct with some of the things that I wanted to show on Excel. So since the creation of this portfolio, VU has risen by $14.38. We created this portfolio pretty much when VU was exactly at $400. So since then, it's been up around 3.6%. Our portfolio, however, has been up 12.65%. So that's around 3.5 times better than the market, which is really, really, really impressive. So obviously, like I mentioned earlier, when stocks like SoFi, which is already up 40%, I would consider selling. But just because this portfolio is dealing with such small numbers, or relatively small numbers, like a few $100 at a time, I feel like selling or profit taking isn't really that meaningful, especially every time Hatch does deduct this $2 fee. So we gain 50 New Zealand US dollars, but ultimately like $48. There's not much I could do with that money here, except reinvest it. But I am happy and comfortable with all these positions here, so wouldn't recommend selling unless it is private and you do have a really, really heavy position and the rewards for it and your returns for it are already really high. I do know that in the past month, a lot of things have been going on that I unfortunately have not been covering just because I've been sick. One thing is the whole crypto boom, as well as the China shutdown of crypto, and then there was the whole debt ceiling issue. But yeah, a lot of things going on that we have not covered just because, yeah, I haven't had the time. But I thought I'd conclude this video with just a couple things for your radar. First is Marathon Digital Holdings. It is in the crypto space. It's the stock that I'm invested the most in privately when it is revolved around crypto, besides my actual cryptocurrency investments in mainly Ethereum at this point. But yeah, Marathon is a really good stock. It has had a really, really strong run up in the past month alone. So for those that want to get a position in it long term, it's not too much worth stressing over. But if you do want to go in for more the short mid-term play, you might want to wait for this to cool off a bit, although Lord knows when that will happen. I have a position approximately at this price range here, dollar cost averaged and throughout this period here, so it's already experienced a nice run, but I don't plan on selling yet. This might be a mistake because back then I actually got into this company at around this price here. I wrote it up all the way up to here, thought there was more room to run, and then there was this crash going down. So rather than securing approximately more than double my money, I ended up just making less than double, around 50-ish, 60% return if I remember correctly. But yeah, this is a good stock to have on your radar if you do want to get into the crypto space, especially if you don't invest in cryptocurrency itself. Another one is Riot, and there's a few other ones, but out of all the things that I recommend, Marathon is my primary recommendation. Secondly, with inflation kicking in, rising interest rates, a bit more on the boring side, you do have Goldman Sachs as well as a lot of other banking companies such as Morgan Stanley or JP Morgan, Wells Fargo, Citigroup, like the one we have in our public portfolio. Now, these stocks may not run up as much as some of our other crazy ones such as SoFi or AMC, just because they are more traditional and they are more of a safe foundation play. So as you can see, Citigroup is only up around 3.78%, which is one of our lowest ones, if not the lowest green stock that we have. But that is okay because this is our hedge against inflation. We do know interest rates are around the corner, rising interest rates around the corner. So I have no problem having this. We are making a killing and everything else, that even if one play is not doing as well as the market, even though this is doing better than the market, but even if it wasn't, I wouldn't be too stressed on it. Now, that is all I have for today's video. If you enjoyed the content, please leave a fat thumbs up and comment and subscribe. Sorry that this video is quite brief and I do have a lot more content, but life has been really busy and I am still a little bit sick. So in my next video, I do hope to cover a few more stocks to have on your radar. But yeah, that is all for today. My entertainment shades are now off. Enjoy the rest of your time. Thank you.